Good afternoon. Time to have a look at the markets and how they're performing. Asian markets mostly lower this as investors digested Chinese economic data. GDP coming in at 4.9% for the third quarter versus expectations of 5.2%. So when we look at the individual bourses and seeing how they are performing, the Shanghai Composite coming in a little bit lower, down 0.1%. The Hang Seng Index down 0.4%, and the Nikkei in Japan also shedding 0.1%. As we look at what's happening on the European side of things, markets pulling back as investors are gearing up for more earnings releases this week. US futures at this particular point is steady. We are expecting a slew of numbers from the likes of Netflix, J&J, Tesla and IBM. And locally, we did have some trading updates coming through from the likes of Discam and, of course, Spur giving us an update with regards to some of the tussles they're all having with SARS relating to that trust. To talk to us about how some of these themes are playing out in our local markets, we are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time. A check-in on the JSE. How are we faring right now, and any company news that caught your attention?
So looking at it, we're flat, and I think you summed it up well there. We had a very, very strong S&P 500 on Friday. Market was up partly because of the beat in retail sales. That everyone very excited about the spending. They're pushing the index through the 50-day moving average. That seems to have fed slightly into our market, but that Chinese GDP number just kind of dampening sentiment slightly, taking the shine off it. So we've got the all-share index up about 1.2% at the moment. We've got resources is also positive, up about 0.5%, but the financials really coming to the fore. So, the likes of Nedbank, Sanlam, Capitec also all looking very, very good. So the financial index up around 1%. Looking at it, I think most of this is got to do with the Chinese GDP story. I mean, obviously the Spur court case was interesting reading, but with essentially that tax matter being settled with SARS. In 2016, you shouldn't see too much impact in the share price, although the market certainly was expecting the resolution to go the other way.
Right. So let's talk about those Chinese GDP figures. I mean, did they come as a surprise for you?
I don't think so. So, it was a marginal miss, and obviously the previous number of Chinese GDP growth coming in at 7.9%. It was significantly higher than the 5.2% expectation. Now, part of it has to do with just the unwinding of some of that aggressive stimulus they put in over the pandemic period in 2020. They had obviously reserve ratio cuts that went through that helped to buoy the property market. And of course, headlines have been filled with the news of the Evergrande and the potential contagion and the fairly aggressive crackdown measures, especially in the regulatory space that the Chinese authorities have been putting in place. So the idea that we were going to see a bit of a property slump, I think, was already in the market. The idea that China is going through an energy crisis, much like India and Europe, it's also well documented. So I don't think too much of a surprise. They've had issues in the manufacturing hubs, which has shut down some production. We've seen factory gate inflation rising in China as well. So the fact that we got a 4.9% GDP growth figure, I don't think is unexpected, but it should start to sound warning bells, definitely around what is to come in the Chinese economy.
I mentioned in my intro that we do have some U.S. companies reporting their financials this week. Last week, we had the banks kicking us off. What would you say were some of the overarching themes with the U.S. banks so far?
Well, when you look at US banks, they have a very unique perspective on the global economy because they process obviously just trillions in terms of transactions. And it was interesting that while we see all sorts of problems floating to the surface in news headlines, everything from supply chain disruptions to inflation starting to creep up to obviously the energy crisis that we've already spoken a little bit about, the banks in the US are on the whole saying that things are looking a lot better. So one of the themes that we saw across Goldman Sachs, Morgan Stanley, JP Morgan, Bank of America, all of them really the idea that the world is in a lot better shape and that they're prepared to release a lot of those provisions that they had in place over COVID. That's helping to really lift the earnings. And And also, I suppose, just the underlying mechanics that are starting to filter through. That you're seeing, spending on credit cards increasing. We would have felt in that retail sales number as well. But also, even on the investment banking side, deal making is up as well. So it seems that across the board, the world is looking in pretty good shape. If you look at, certainly if you look at US bank earnings.
Right. So when it comes to the numbers that we are expecting, I mentioned, Netflix, Tesla, IBM, J&J, to name a few. Which one of those will you be keeping an eye on, or at least be interested in?
I think, US earnings season is always one of the busiest times for anyone who has an eye on the market. There's a huge amount of data that we're going to be able to chew through. And, we hold Johnson & Johnson in portfolios for clients. We hold IBM in portfolios for clients as well at the moment, just because we believe that with slightly higher inflation, we're going to see, a move towards the more traditional value companies. So it is how we're positioning. So certainly those two are going to be ones that we're keeping an eye on. But, looking at the likes of Netflix, the entertainment stocks, it's also important because it really gives you a picture of how the world is developing. So it's one of the great primary sources of economic information is US company earnings calls. So we definitely, as earnings season ramps up, we're entering a very, very busy period in terms of research work.
All right, Gary Boyson, thank you so much for your time. That is Gary Boyson from Rand Swiss, taking us through the day's trading day so far, and also what to look forward to for the rest of the week. We're going to